Hi guys, hope you guys are doing good. In today's video, one of our subscribers asked us to make a video on how one can minimize risk during entry zones of higher time frames like the H4, and how you can actually minimize your risk and get the best risk to reward ratios. If you are new here, don't forget to hit the subscribe button for us to continue sharing this knowledge with you. Let's get right into it. Alright guys, let's get right into it. Alright, so I've been getting a lot of questions from you guys, and I've decided to make a video on this as it seems a lot of you get confused on it. Alright, so I'm going to be showing you how you can actually minimize your risk in shorter time frames based on the higher time frame. Right, so as you all know, I keep trading very simple, right? No need to complicate this. This is not rocket science at all, right? So for this example, I'm going to use a buy setup, and this can also be applied on the sell side, right? So just make sure that you understand what I'm trying to teach you here. Okay, so in this case, for a buy setup, right, we've got rally, base, and a rally, right? So this is our rally, this is our base, and then we have another rally, right? So structure is very important. That's one thing that you need to keep an eye on, right? Market structure, not the trend, right? Because I know most of you guys have been taught to follow the trend. I don't follow the trend, I follow market structure. All right, so let's say this setup, you identify such a setup in your H4 time frame, daily, whatever, right? I'm going to show you how you can then minimize your risk, right? So once you've identified this type of buy setup, what you have to wait for now, you wait for the price approach back to the area, and then you look to buy at this zone, right? So now the only problem, it's not really a problem, but it all depends on your risk tolerance, right, and your appetite, right? So if you're going to buy right here, this means that your risk is going to be, you're going to be exposed to a lot of risk if you take this setup off the H4. I'm not saying it's a bad thing. Yes, you can, but remember, this is trading, and our goal is to make sure that we minimize our risk at all times, right? So in this case, right, this is going to be a risk, and then you can use this area as a target, right? You can use this area as a target, as this would be our higher high, right? So if price has to continue moving up, this area has to be broken. So this can be our safest area for us to take profit, right? So as you can see, the reward is okay, right? And the risk is also okay if you look at the risk to reward ratio here based off the H4 time frame, right? But remember, we always want to minimize our risk, and we can do this by waiting for such in shorter time frames, right? Now, some people will decide to actually just go long, right, as soon as price hits this zone, right, and they've got their stops below. In this case, you're looking at risking 50, 60, 70 pips right there, which is a lot, right? So I'm going to teach you a way on how you can then minimize your risk. So I'm going to use a different color, right? And this color will be based off the M15, it can be your M5 or even M1, right? These are your shorter time frames, and these are time frames which you can actually use to minimize your risk, right? So if we have price moving down, right, moving after this base rally, right, if we have price moving down, what we are going to wait for, right? I know some people would decide to just go long from that area and have their stops just below the zone, right? But the problem with that is usually price can actually go grab stops below and then continue going up, right? So to be on the safe side, what we're going to wait for, as soon as price hits this area, right, we are going to then look for the recent supply area. Right, we're going to look for the recent supply area, and after the recent supply area, we want to see price break structure, right? So this is confirmed, right? We've got a break of structure, right, at that zone. After we have a break of structure, we can then look to see price get back to this order block, right, and then we can actually minimize our risk, and we can hold our trade to go long. So instead of risking 50 pips here, if you time your trades in shorter time frames, you can actually risk 10, 15, 20 pips, right? And that's a significant number. that you can actually risk right there, right? So we're going to go to the charts and just look at these volatility indices. I know a lot of people trade these, right? And we're just going to look at simple examples, right, from your higher time frames, um, you know, moving down to the shorter time frame. So as you can see right here in the weekly time frame, we're going to look at something recent. We had a drop at this area, right? And then we had a base. So this is a sell example. And then we had a drop, right? So this becomes the area that we want to keep an eye on for our execution. Right, let me just find this. All right, there you go. There, right? But now, seeing this setup in the weekly time frame, the risk will be, you know, you're going to be exposed to a lot of risk. So once you've identified your zone, what you can now do is you can move down to your shorter time frames. As you can see, we had this area right here. Right, this is where, and as you can see, we also had price approach, right? Price actually took its time going up to that zone, right? And as soon as price reaches the zone, in this case, let's see if price gave us a nice entry. In this case, we didn't really have, you know, a clean entry on this one based on structure, as you can see. But what we had was we had a nice pattern, right? A nice M formation, right? With the second leg being higher than the first one, right? So as you can see, price actually got back to this area. And now to minimize your risk, you can actually now identify, you know, other zones within the major zone. So from, we've got a drop base, so you can now highlight this area and you can look to take your trades from this zone, right? So as you can see in your H1 right here, right, this is where the trade was at this point, right? So if we can go down to the shorter time frames, let's see if this will allow us to go back to the M15. This is what we can see. Let's zoom in on that, right? So this is what we have, right? As you can see, price was moving up. We've got a rally, base rally. So as price got into the zone, right, price then broke this mini structure. Not really significant. I'd love to see a structure like this, but this is still okay. That's still within the zone, right? So after that had happened, right, this would be your order block that you are going to focus on right here. As you can see, that's a decision point type 1. So after that structure was broken, as you can see, price then went back to this area, right? So you had an opportunity to actually execute this trade off the M15, right, and minimize your risk. As you can see, stop loss a few pips above. You had a very good number of pips to catch if you were focusing on your bigger picture, which is your higher time frame. In this case, if you took the trade, you would be holding this trade for 1, 2, 3, 4, 5, 6 weeks, right? Risking, you know, a very good, a reasonable amount of pips, right? So this can be found anyway, guys. And you all know, I always want you to actually go and back test this, right? That's the only way that you can learn, right? You have to go and back test, right? And this can be found anyway, but remember, our higher time frames are very important, guys. Very, very, very important higher time frames. Okay, so here's volatility VIX 75. All right, we had a nice zone here. I mean, we can see how price left the area, right, after that grab, how price left the area, and then we had price going back to this area. So we want to see how we are going to what? Minimize our risk here instead of just, you know, going short as soon as price gets there. That means we are exposed to a lot of risk, right? So this is the zone we'll be interested in. As you can see, that is when we had these explosive moves to the downside right there, right? So if we can go down to our H1, this is what we have, right? And from the H1 itself, you can see that we had an opportunity to actually enter there. Why? Because we had these structures being broken. As you can see, that structure was broken. This is a better example. After the structure was broken, we had price moving back up to the order block, and we had an opportunity to enter right there. So if we can go to the M15, this is what we had. See, a nice opportunity to actually minimize your risk. If you go to the M5, let's see if there, right? See that? A nice way to actually minimize your risk, right? Just having your stops just above and you had an opportunity to enter this trade, right, and get good risk to reward, right? This was a good risk to reward trade. Imagine just having your stop just above that area and catching all those pips right there. All right, guys, I hope you guys learned something from this. Don't forget to hit that subscribe button if you are new here, or if it's your second time here. Also, check out our free Telegram channel for free signals, free setups, and more educational content. Find the link in the description below.